How does tax work for your children? When you employ them, when you pay them dividends, or whether you're receiving interest? Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Bringing children into your company is a really great way of managing how you're taking funds out, spreading the income, using their personal allowances. However, there is a few different areas that we need to be aware of, and we do need to be cautious in how we're doing this, because we can't be putting our minor children in the same way as grown-up children. So what are the implications if we are dealing with minors? And by minors, we're talking under 18-year-olds. Over 18-year-olds, they're adults. We can be doing different things with paying dividends, paying them a salary, paying different things. Whereas when we're talking about anyone under 18, there are certain things we need to know. So let us start with interest. Now, if we are using funds from a child to invest in the company, we just need to be cautious, because any interest that is potentially paid if they're investing in the company with some of their money, or if you're getting interest on any money you're putting on one side for them, this will be reportable on you as the parent if it's you, the parent, putting that money into any sort of savings account or any interest-bearing account if the interest is over £100. Now, one thing we just need to be aware of here is if it's not you putting that money in to get the interest, potentially it's grandparents, family, friends, different things. If they're the ones giving the money that is going into the savings account, then that interest isn't reportable on you as a parent. And that's quite an important factor, because if it's you putting it in, then it is reportable because you're trying to move your income onto them to get interest on their allowances compared to yours. And the taxman doesn't like that because it seems like a bit of a tax dodge. Whereas if it's their money and they're getting interest on that money from other people, then that is fine. There is no reporting on the parents. So hopefully that just gives you a quick brief on interest. Let's dive into our property company, because we have different people who will put dividends into their, or I say shares into their children's name. And in putting shares into their children's name, then they're looking at, can I be paying them dividends? And if we're paying dividends to our children from our companies, we need to remember something called the settlements law, or the settlements legislation. And the settlements legislation basically says that if they are getting any income, and as can be seen on screen, where the settlement legislation applies, the income over £100 per annum paid or made available to a minor child or stepchild will be taxable in the hands of parents and not treated as the child's income for tax purposes. A stepchild includes the child of a civil partner. And the key thing here is that in the Income Tax, Trading and Other Income Act, it is basically saying anything connected with the parent will be treated as the child's. So for a connected company, we just need to take care, because the connected company potentially could be brought into the settlements provisions and actually says that if you pay them a 5,000 dividend, that's actually your dividend and you'll be taxed on it. So it's just care needs to be taken if you are looking at paying any dividends to your children from your company. Obviously, the other implication of having children as shareholders is lending. And it's a really big question mark of if I've got minor children, so if you had a 5-year-old and a 7-year-old who are shareholders, if they own 50% of the company, it may be more difficult to get lending in that company, or potentially impossible. So make sure you are talking to your finance brokers to ensure that whatever shareholding, if you have any minor children having shareholding, what the implications are, because you may be able to give them 5%, but you may be able to give them nothing, depending on the lender you're using. There are some lenders that hate having any minors on. There are some lenders that will accept it potentially up to around 20%, but it is very lender specific, and it depends what type of lender you're needing. So the more niche or specialist the strategy you're using, the more restrictive it will be in terms of lenders, as well as lenders' criteria. So potentially very specific social housing, there may be 1 or 2 lenders available, and if they don't like having minor children as shareholders, you won't be able to get lending. So you just need to take that into consideration as you're doing this, so that you don't find you're minimising your opportunities from a lending point of view. So that shareholding position may be quite dependent on what is required from a lending point of view, rather than what you'd like to do from potentially an inheritance tax planning or future planning point of view. From an inheritance tax point of view, having your children in as early as possible is a lot better for you, because that is reducing your estate as the value of the company grows. However, it depends, you may not be able to have them in straight away, but as it grows and as they hit 18, you can bring them into the company, and that might be a great opportunity to bring them in. However, we just need to remember that there are capital gains tax implications of bringing them in, and check out the video on that on the channel of them transferring shares to your children. Now, in terms of when you do transfer, you can do a bit of tax planning in that, so that it's minimising any capital gains tax points of view. But obviously, one way we can do a bit of planning, as you'll have seen on the channel, is about alphabet shares and having different share classifications. So each different person has different ones, and this can be a great way, especially as children are getting towards university and things like that, where the company is generating a good profit. You can be paying a dividend to that child at university, and it saves you having to take the money out, pay the tax, and then give it to them. Depending whether they're working or they've got a job, potentially it can be a way of paying them and using their personal allowance of $12,500 to contribute towards their rent, their tuition, living costs, depending how generous a parent you are planning on being with these different areas. So there's a lot of care that needs to be taken in terms of the shareholdings and the dividend position, to just make sure that you're not falling foul of anything and you're not restricting what you can be doing in your property company. Now, the final part that we want to look at is employing your children. As having been brought up within a family business, I was working at quite a young age in the family business, because what else are you going to be doing? So on that basis, we just need to be aware of what we can be doing and when we can be doing it. And in terms of when we can be doing it, is you're not allowed to employ anyone under 13. So as soon as your child is hitting the age of 13, you can legally employ that child within the business. Obviously, you can't suddenly decide to pay them a $20,000 salary for working no hours, because that would be seen as not doing things properly. However, if they're helping with the admin, you'd be perfectly fine to pay them minimum wage for the number of hours that they're doing a week, to then hopefully help pay their allowance, and it's a company expense because they're working for the company. I know these days with younger family members, they're on social media, they're on Facebook, Instagram, and all these different ones, which, depending how you're sourcing properties, how you're finding tenants, how you are marketing to potential investors, all of these different things require bits, as well as there's dealing with emails that are coming in, doing bookkeeping. There is a whole host of things that they can be helping with, and to be fair, it's a great way of getting them involved in the business early, so hopefully as you develop and grow it, they will be able to take over in the future and benefit the family and help develop it to the next level. So at that age you can employ them. You will need a PAYE scheme if their earnings hit over a certain amount, but just be aware that if they're at school, there is set hours that they can work, and the number of hours they can work on days they're at school, and also weekend days up until they're 18, when obviously as things open out that they can do whatever hours you're wanting them to do. So there's a few caveats there that you need to be aware of, but you can be employing them from 13, and if you're on a payroll anyway, you would need to include them on the payroll so that that is all properly reported. Obviously under 16 you won't have a national insurance number, as they're issued when they hit 16, and that will then be available at that age. As you can see, there are ways of bringing children into the business, whether it be by employing them, whether it be by having shareholdings and potentially paying dividends, or whether there is interest, and interest is just one to be aware of as a parent anyhow. But hopefully that gives you an idea of what you need to think about when trying to incorporate your children into the business and the tax implications, especially when they are under 18. When they hit 18, it opens things up, and it's more a matter of just trying to bring everything together so that you are doing a bit of planning for inheritance tax depending on your future goals of the company. Hopefully today you've discovered how it works when your children are getting some sort of income, whether this be from your company or wherever it may be coming from. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing. Let's make tax less taxing.